Okay, guten Morgen. I guess we're live. It's 6:33 a.m. on Wall Street, 3 hours before the open of trading. It's time to get your macro on. Welcome to QuantBox Live, where we uncover your best fundamental investment opportunities across the global markets, stock indices, commodities, currencies, and, well, more. My name is Wayne McDonald. I'm the founder of QuantBox, and I built it because I'm inherently lazy. So I want to automate using AI data analysis of sentiment, inflation, employment, GDP, technical analysis, open positions by institutions and retail traders, and now covering real time market sentiment as far as markets are concerned, what's actually happening now on the yen futures, on the dollar index, on the VIX, on gold, on the S&P 500. For example, we look at all of those and say what's happening right here, right now. Not just long-term analysis, but short-term analysis. Wow, it's like really amazingly awesome. And that's why I built it. I'm an economist by training, and I love to understand why I'm making investments. Not that I don't want to make an investment purely because two moving averages crossed over. I'd like to know why the money is moving from one place to another. And we call that macroeconomics. So you see pretty colors that track the flow of money around the world, or scatter plots that track the money in real time, right? We track money as far as where institutional investors are putting their cash. Are they long the euro or short the euro? Are they long gold or are they short gold? Are they long oil or are they short oil? It's nice to know these things because then I can follow along or I can plan ahead. But the most important thing about QuantBox is it gives you the confidence to let your winners run because you know why they're winning. So, anyways, if you're watching this on YouTube, you're watching a delayed video, you are hours and hours and hours and hours behind the curve. Oh my gourd. You should attend live and get all the pretty colors yourself because QuantBox is not a website, it's a database. You can manipulate this data in real time. However, the big hurdle is the trial is almost $8. Well, forget it then. Yeah, forget it then. It's too much. To know why my trades are moving and to plan ahead, nope, too much. Anyways, let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term. Never risk money you cannot afford to lose. Let's get on with it. Oh, and by the way, if you are watching this on YouTube, your $8 includes a 16-hour macroeconomic training course and probably a 2-hour statistical analysis course. So you get it. So don't say, I will like it, but I don't know it, so I can't get it. Forget it. That's been solved. Your problems are solved, all of them. If you sign up, you're actually grow 3 inches taller. Hmm. Well, all right, maybe not, but you do get prettier. All right, loading, loading, loading. All right. Oh, yields are back up. Man, oh man, yields are back up on the 10-year T-note. Do you think it has anything to do with Russia and Saudi Arabia collaborating on the oil markets? Uh-huh, probably. But anyways, yields are up. That's not good. Oil prices were way up and then are coming back down. Brent hit 90, which is international oil. What we track is my oh my WTI. Gold futures are, somewhat changed. Gold has been coming down for the last 3 or 4 days. Cool, which might be an opportunity to buy. S&P 500 down around 45,000. Okay, yeah. So that's down. We've had a couple of down days. I wonder if it will soon find support, or are we going to wait all the way to the Fed meeting and double bottom before we make a rally? Well, we don't know. Euro dollar just slightly bullish. Bitcoin flat. Okay. Looking over here, here's all the assets QuantBox would score as being up. Here on the right are all the assets that QuantBox would score as down. And then you can see the last while, the German stock market, the UK stock market, the US stock market, as as indicated by the Dow and the S&P 500, and the Japanese stock market, you know, uh, have come down a bit, which is expected. You can see from sort of August 1st, there was a general decline in the stock markets globally. Then there's been some up, and then as of late, a little bit of flat or down. But what you want to do is if you look from this point, are you going to continue the trend up? Okay. And some of them, if not most of them, have made higher highs above the summer. So maybe this continues. And you're like, when I can barely see it, it's so small. Well, you get your own copy. Okay. I can't see it. Well, you got your own copy. So, anyways, you can see like here are all the stock markets around the world. Okay. I hope you use this stuff. I don't know. Do you look at it? Would you like a larger version? Like, do you want like a whole page just to look at that? I kind of like it just to reaffirm like most things are generally up. The DAX is down. You can see the DAX has been falling. Okay. Okay. The DAX has been falling. The UK is kind of flattish, but everything else is up quite a bit. Okay. So the thing is, will it continue? That's what we keep asking ourselves. Taking a look at the gauges, about the same still. I mean, look, a week ago, the weekly bias was risk on, so that swung all the way back around. But I think yesterday these were -4, and despite the news out of Saudi Arabia and Russia, their desire to push oil prices up, the American media right away says they're doing something to compromise the Fed and they're trying to hurt Americans. Maybe. I don't know the intentions of OPEC, but is it just maybe China is choking on its own blood and won't need a lot of OPEC oil relative to normal demand? Maybe they're just doing, I don't know, what you would expect an oil cartel to do. I don't know if they're evil or not. The media likes to say they're evil. Maybe they are evil. I don't know. But nonetheless, I'm like, well, one of their major customers is basically offline. So maybe it has something to do with that, right? Or the fact that probably every player on the OPEC board is cheating and lying and pumping out more oil than they say. Who knows? I don't know. But nonetheless, oil prices are up. And well, I owned it at 70 something, and one of those fishes that got away, huh? I had the fish in the canoe and it got away. So, anyways, I tried about 3 times buying. I just couldn't hang on to the volatility. So, anyways, boohoo for me. Anyways, on the short run, S&P 500 slightly down. Okay, dollar slightly down, which is kind of interesting. So, over what period, right? Gold is flat, yields are flat. So on the very, very short term, this is flat. VIX is up though, which is not good. Okay. Medium term, flat, flat, flat. Big move in yields. Okay, big move in VIX. That's not good. That's why you're getting a -3. And then S&P 500 flat on the long run, which is, let's say for a monthly point of view, we had some up and then we had some down. So it's flattened out. Dollar index slightly strong. That's a sign of bad. Gold has really gone nowhere, so it's not necessarily positive. Yields are up. That's bad. Yen, right? Yen not working right now, and whatever. VIX is actually positive. It's down on the longer run, but up on the daily and weekly. So this is where we're just like it's still a mixed bag. Remember, months and months and months ago, I said risk may return to the markets, the risk on somewhere between the third week of August and third week of September. This is still the first week, or depending on how you measure it. I'd say this is the first week of September. We have lots of time for this to work out yet. And so it's still somewhat risk off. Okay. Yeah. Yeah. All right. Well, be careful. Um, yeah, maybe this is the end of the world. Maybe it ain't. So let's go to the scatter plot and just see what's happened so far today. And not a lot is working. You can see there's a lot of things over here not working and a lot of things up here not working, but that actually might be good. If you believe there's a trend in place, then these assets are up, but they, right? These assets are down, and maybe you're like buying the dips or selling the rips today or tomorrow. If they're out of position, those might be the things you end up trading. Okay. So again, everything in this bottom right, let me do it this way. Let me get my drawing tool. Everything over here, QuantBox expects on the long run a higher probability of going up than down. So you might put this on your to-do list today. I don't know. Is Beast a buy today? Maybe. Is the DAX a buy today? So you got to look. Have they made higher highs? And have they pulled back? Doesn't matter if they've fallen 1 or 2 or 3 days, whatever. And are they at support? And if they're at support, will you get a reversal pattern on a small time frame that you could trade? What about CAD yen? It's down today. Oh, we know that. Yeah. Great. Is it at support? Has it made a higher high? Is it at support? And is there a possibility technically that this turns bullish today? Is there an opportunity? So you actually want to look at all of these. And you can see, oh, wait, these are yen pairs. Okay. Here's a stock market. Here's a stock market. Here's a stock market. Here's a stock market. Okay. Now, some of these, everything over here is expected to be down. All right. All right. So these are down and they're supposed to be down. So that's actually already working. And that's what has been dragging these things down. You see, when the stock markets fall, the yens are supposed to fall. Okay. So it's kind of weird if QuantBox says, well, the stock markets are going to fall, but the yens are going to rally. Well, that's just because of the monetary policy of the Bank of Japan. But if this stuff over here on the left stabilizes today or tomorrow, for example, because this is very short term, if they stabilize, then these are probably going to go up. If these stop falling, these will probably stop falling. So this is what I want you to think ahead. Okay, cool. Then look at this. Dollar's trying to weaken. Yeah, interesting, which is risk on. So maybe the stock markets are have their pullback today. We'll find out. Yeah, this is the one that makes me cry. This is the fish that I had in the canoe and it got away 3 times. So when you're trading oil, make sure you have a net and a club. That fish jumps out. Well, he's going to pay the penalty anyways before he gets away. So, anyways, yeah, I had oil at 78 and then 79 and then 80 and a half. And every time, crazy volatility. I'm not upset about getting knocked out. I'm just upset about not being in. But I got out for good reasons. Volatility came in and like in an hour, it moved like 50 or 60 or 70% of the day's move. It dropped in an hour. So I got knocked out of break even. I'll do that every time. The problem is I did it 3 times and I don't have any of this 8% rally. Oh, I could have retired if I put all my money into it. Oh, yeah. Well, I don't do that either. But anyways, Bitcoin down. Remember, I owned Bitcoin at, what was it at the time? 28. And I'm like, you know what? I'm going to get out. That always feels good. So that one got away in a good way. Yeah. It's like stepping in front of a bus and then having 1 second to step back and go, that was close. That's how I feel about Bitcoin. Anyway, so German stock market way down, like, well, for the week, down 1%. Aussie dollar down 1% for the week. Euro dollar down 1% for the week. Kiwi dollar down 1% for the week. All right, so not terrible. Pound dollar down 0.5%. So you can see there is some dollar strength here, but is it really, is freaking out warranted? Maybe, maybe, but probably not, right? I wouldn't freak. And this is over 7 days. So when I turn on Bloomberg the last couple of days, they're like, the dollar's strong, the dollar's strong. You're like, yeah, bro, it moved over 1% this week. Um, okay. So, anyways, I wouldn't be overly critical about it. So, what about some of these yen pairs? We covered this before, and there might be another opportunity today. So, you might want to look at cat. Do you like Swissy? Well, I'm worried about correlation coming back in. Okay. What about pound? Oh, well, neutral. Okay. 70% short on retail. Yeah, look at the mixed bag here. It's kind of interesting. It's so mixed. One, one, -1. So if this turns positive, which it will, it should trend. Okay, just slightly there. Just want to look at some of these fundamentals. Sorry, I geek out on this stuff. Yeah, GDP's. You know, I wonder. I wonder when this goes negative. Inflation 7%. I just every time I see it, I'm amazed. It's just amazing. 2 years after COVID, and it's still 7%. Absolutely amazing. And the other actual amazing thing is Japan with 3% inflation. That's crazy. You know what it was for 30 years? Zero, -0, right? So, anyways, that's pretty good. And they're pretty happy. Remember, the Bank of Japan is trying to create this inflation. They measure it in 2 ways, qualitatively and quantitatively. Go to the Bank of Japan if you want to know more, but that's part of their yield curve control. So, anyways, kind of interesting. GDP is still rocking, or not amazing, but compared to, like, how does the UK have high inflation and no growth? It's just amazing, isn't it? Shows you that there's a tug of war here. This means raising interest rates. And if this goes negative, that means they can't raise interest rates. So somebody's got to lose money somewhere. Where are they going to lose their money? Real estate? Stock market? What if the UK jacked up interest rates and paid down their debt? What governments typically do in a situation like that is jack up taxes and jack up spending. Just give poor people more money. No, 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 no. That's where you got inflation. So what you should do is jack up taxes and pay down the debt, and everybody wins. Okay. And then you get growth again. See, I think, if I was elected Prime Minister of the UK, it would be funny, or the head of the Bank of England, which is actually more likely. I would ask the government to say, don't worry about inflation, focus on growth. So how are you going to grow? Pay down your debt. It's the same thing. Let's say you came to me, Wayne, help me with my personal finances. I'm like, show me your debt, show me your income. Let's go through it together. How much money you make? Great. How much debt do you have? Really? It goes down to the same every time, right? Ooh, you have too much debt. Well, what do I do, Wayne? Get a side hustle. Let's be more productive. You're going to work nights and weekends. You're not going to go on vacation for a couple of years. Sorry, you're the one with debt, right? Why do you have such a nice car? Let's get rid of that car payment. Let's dumb your car down from a Porsche to a Hyundai. Great. It'll be for a couple of years. Don't worry about it, right? And we just work on it. Let's pay down your debt. You're going to get 2 jobs. You're not going to go on vacation. What am I doing here? I'm jacking up your productivity and making you solvent and building your credit so that you're worthy of investment. Oh, wait, that's what a country should be doing, right? So, anyways, I'll get off my soapbox now. But, anyways, it's only money, guys. It's only money. Interest rates, huh? 5.25 and negative. Wow, what a difference, huh? Nice little carry trade. Nice little carry trade, and yet retail is short. They have a negative carry. Wow. See, it's work though, right? Short, 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 short. Retail feels like it's going to fall more. Maybe it will, but do you think retail's knows that we have this coming? Maybe not, huh? Well, now you do. Wonder like pound versus something else. Which is the worst dog? Which is the ugliest dog? Notice I didn't say child. Dog. Which one's the ugliest dog? And well, we can't decide who's uglier. Oh my God, right? Oh my God. 50-50, basically 60-40, whatever. 30-30s, 70-70. This is a mess. People love trading euro pound. They love it. Look, and when you look at retail and institutional positioning, you don't have an edge on either side. Interest rates, euros behind. There's a lot of talk that the ECB just can't raise interest rates. Really? Then you look at inflation. 5% inflation is not good. GDP, just it's crazy, right? Look at that 0.3. Wowzer. So this is a mess. Denise wants pound kiwi. Is that right? I'll do it quickly. Okay. Solid score. Uh, careful. Okay. Oh, it's been working since July. Yeah, it usually does. Careful. Okay. Especially if this, okay, if this turns, the trend is but technical analysis, by the way. Yeah. Then, yeah, be careful. The issue is Kiwi is just so weak. So the, okay, it's sort of like the pound is a flea and the Kiwi is a dog, or maybe it's the other way around. I get them all mixed up. Together they're dogs with fleas. Um, I wouldn't be short this. And then I look at this and I'm like, I would never do that. Even though it's coming, at least seasonally, there's a downward move. Remember, QuantBox does an 18-month outlook. Hey, YouTubers, QuantBox does an 18-month outlook of every major currency pair that we trade on this sucker. So pound and euro and Kiwi and Aussie and CAD and right. And it's pulling data out of the Fed and right and projecting 18 months in advance. And based on QuantBox's analysis, I wouldn't do this. I wouldn't do this. And even this is down, I'd say maybe. I don't know, but I wouldn't do it. So long for now, 2.15 is your best case scenario. I imagine that this just flattens out, that this to some degree will happen. Okay. And that this will flatten out. So right now, base case projection is 2.14. We're at 2.13. Like there's barely 100 pips into this for the week. I mean, for the week. I mean, that's usually a day trade, you know? So, yeah. And it's funny, our target, the weekly base case target is just slightly above the average price, anyways. Eh, whatever. So I'm watching things like here's gold. This is from before. Remember yesterday I said, yeah, probably come down 382, the sucker. Now we're at the 382, and I'm watching and probably be buying a dipsy due to the upside. Okay. Yeah, someone's got a hot mic. Oh, I got it. Turn mic on. Cool. Well, we got a lot of people today. Hey, good morning, everybody. Yeah, good morning, everybody. Thanks for keeping your webcams off. Appreciate that this time of day. Yeah, look at I got my hair tight for you today, huh? Tight. Yeah. I want to look pretty for you. You're my special baby. Um, so anyway, so I'm thinking, how about this, huh? Well, we're not quite on the higher high yet, and the 21 is still above the 55. So I might be tiptoeing north on this later today. Cool. Right on. That's called a strategy. Very nice. My WTI had a big move. You know, this is the production cuts. Buy the rumor, sell the news. Great. So now what do you want to do? Do you want to try again? Well, you're on the hourly EMA. Yep, that's fine. Pre-news, I had it coming down. Post-news, we might have to redo this. And now it's still about the same. Uh, this is the 3A2. So I still might just wait for this opportunity on a 4 hour. Okay. Still might just wait for the 4 hour here. I don't, there we go. Because I can't buy it high. Even if I'm a bull, I can't buy it high. So I'm patient and disciplined, I think. I'm going to try. So maybe buy that, maybe buy that. How are we doing on the stock market? Let's get off of 15. It's still technically bearish. See? Connect that top with these tops, with that bottom, that bottom. And we're below the moving average. So if I was a day trader and scalper, yeah, I'd take this down for now. But I'd rather it go up. Doesn't matter. It can go down today. If you're a scalper, you don't care, do you? You're indifferent. So yeah, you'd be taking this down. Simple little trade. And so for a long-term trader, what you're really looking for is the opposite, where it climbs back above the moving average and uses it as support. Then I buy it and I hold it to the end of the year. Same techniques. I'm scalping to the downside and I'm positioned to the upside. I'm short-term short, long-term long. And it's really a cool hedge because you can just be selling this over and over and over again, but be long somewhere else. Like my retirement account, I'm long the stock market. So in my cash forex account, I can be bringing this down, making money, offsetting my losses in my retirement account. I'm hedging. So it's an okay thing to learn how to scalp. So this is definitely 100% down now. But what if it flips to the north side somewhere around this 4 hour EMA? Yeah. So that's the big news for me today. This is what I'll be watching today. I wonder if maybe it consolidates here and turns north later today or tomorrow. So all I know is where on the map I am. And I know where I want to go. I want to go here. Okay. So I now, right? So now I just have to wait. This, right? This is where you use your compass now. So I have my price. I might buy here somewhere around this price. What minute do I buy it? What hour do I buy it? Oh, I don't know. I don't know that. I know the price. And this is where patience and discipline kicks in. I know I'm interested at this price. What if it falls a ton of, well, I never got an entry, so it'll fall without me. But what what will I do, or when will I pull the trigger if it starts doing stuff like this? Okay. The pattern now tells me when. That's the time issue. And the time is displayed at the bottom. The price is displayed to the right. So I know the price I'm interested. If I buy it, what hour? I don't know. But I would like to buy either a double bottom or a higher high, higher low after a double bottom. So I don't know if that'll happen. And there's a high probability that something like that doesn't happen. Well, then it falls without me. Now, if it rises here, will we get here? I don't know, but I'm going to hold for that and probably higher, of course. So we'll see when we get there. So I can't do anything to influence that. All I can do is risk management. So at some point, let's say It does another higher high, higher low. Do I move my stop? Maybe a little bit. But then if it makes a new higher high, I jam my stop. And I'll indicate that with orange, I guess. I'll move my stop to break even when we're at this higher high. Okay. So all I can do in that meantime is move my stop from here to break even on the second higher high, not the first. The reason I do that is because the assumption is it's going to come back, test this level, and then move up. So then I could move my stop there and lock in profit. And then my new assumption is it's going to do this. And then I can move that stop to here. And it's just risk management. And how long do you let it run? Forever. Or until you hit your target. That's all. Right? If you don't have a target, then let it run forever. Just keep moving your stop. So, anyways, my name is Wayne McDonald. That's my story, and I'm sticking to it. If you're watching this on YouTube, why don't you give QuantBox a try? It's got lots of pretty colors. You can show it to people and make you look smart. Cool. But also, ultimately, once you understand the data, it'll give you confidence to let your winners run. And let me tell you, after doing this for over 20 years, if you don't let your winners run, you're not going to make it. You're not going to make it. You're not going to survive. It doesn't work without letting your winners run. Honestly, you can sit here and you're like, Wayne, I'm the world's greatest scalper. Great. See you in 20 years. Let me know if you get tired. Let me know if you burn out. Is it sustainable? I hope so. I hope you can do it. But ultimately, it's probably easier to buy it, move your stop to break even, and do nothing. Peace on earth. May the pips be with you. May your profits be above average. Cheers. Beep.